Quick reality check. If the only time your family sits down to talk money is when someone dies or somebody's begging for a loan, you're already behind. You're playing catch up and the world is moving too fast for that. Think about it. Inflation keeps silently chipping away at every dollar you earn and every dollar you've saved. Markets feel like a Vegas roller coaster where the odds aren't in your favor, and the cost of taking care of mom and dad if they ever need long-term stuff, let's just say that it rivals a 5-star resort, except nobody's sipping pina coladas. Before another year slips by and the stakes get even higher, it's time for an honest family conversation about how money really works and why the save and spend system might be the most important topic at the dinner table. Stay with me, because by the end of this video, you'll know exactly how to host that talk, handle objections with grace and empathy, and chart a path that protects at least 3 generations. Yes, including the long-term care question everyone avoids. You'll walk away with a proven framework for turning a difficult conversation into generational advantages, and we're here to help. Laying the foundation. Why talk family finances now? Let's zoom out for a moment and look at the world we're living in. According to the Bureau of Labor and Statistics, the Consumer Price Index just clocked a 12-month rise of 2.7%, and expectations for an inflation for 5 years jumped to about 2.9%. While those numbers might sound tame compared to the high peaks of 2022, they're still silently hollowing out savings accounts and fixed incomes. That 2 or 3% might not seem like much, but over a decade, it's a massive drag on your purchasing power. Your money is losing its power every single day. Meanwhile, market volatility remains elevated. The VIX, that's the volatility index, has spent most of 2025 above its long-run average, a constant reminder that paper gains can vanish faster than you can refresh your brokerage app. We've all seen it happen. You feel rich one day and not so rich the next. Here's the bigger point. When prices rise, portfolios whip, and the interest costs climb, the family that understands how to keep money growing uninterrupted and under their own control is the family that wins. Our save and spend system was designed for exactly that, but it only works if the people you love know about it, know what you're doing, and why. Otherwise, your plan dies with you, or worse, it turns into a secret that breeds suspicion and distrust among your loved ones. A legacy isn't just about what you leave, it's about what you teach. So when you think about this upcoming conversation, don't frame it as an intervention about bad spending habits of people. Don't start with judgment. Frame it as an invitation to build a multi-generational fortress, a financial compound where everybody speaks the same money language and works toward the common goals. This isn't about fixing the problems, it's a talk about building something stronger together. Setting the stage. Crafting your family meeting or family financial reunion, schedule is half the battle, so let's get specific. You need to pick a time when no one's rushed or distracted. A Saturday afternoon when nobody's racing to soccer practice or glued to Monday morning emails is perfect. The goal is a low-pressure environment. Avoid the formal dining room with its power dynamics and stiff chairs if you can. The living room couch with snacks on the coffee table might be perfect for your family. This informal setting signals that this is a collaborative effort, but not a lecture. Before the meeting even starts, you have to manage the expectations. Tell everyone ahead of time that you're not asking for money. You're sharing a simple strategy that you believe will help everyone. This simple statement lowers defenses immediately and moves the conversation from, what do you want from me, to, oh, what can we build together? When you're finally sat down, resist the urge to launch into 30-minute monologues. Instead, start with a simple, open-ended question. Hey, what does financial security look like to you in the next 10 years? Let each person answer. Listen, write it down. You'll hear the deepest fears about debt, college tuition coming up, retirement impending, or the terrifying prospect of elder care. Now you have permission to introduce ideas that solve the pain, not just pitch your favorite policy, contract, investment idea. You're meeting them where they are. And I know this sounds obvious, but keep the phone on silent. Better yet, have everyone place their phones face down on the table. One distracted glance at TikTok or a text notification and you lose the fragile momentum you've built for the people you love the most. This is about being fully present for the people you love. Demystifying the save and spend system. The why, not just the what. Now let's talk about the system itself, but without the financial advisor jargon. We need to make this understandable. The save and spend system uses specifically designed whole life insurance policies or insurance contracts to create your own sources of capital. It's like a family-owned bank with 3 core superpowers. First, the dollars you put inside are compounding and guaranteed. They have uninterrupted growth even when you borrow against them. Second, you decide the repayment terms yourself. Unlike a bank that dictates when and how much you pay back, you're in control. And third, the growth and eventual payouts of the policy are going to be enjoyed with unique tax advantages that you simply cannot find in most other financial tools. Think about this. Most families spend a lifetime paying interest to banks, credit card companies, and lenders, watching that money exit their ecosystem forever. But when you become your own banker, the interest you pay on a policy loan circles right back into your policy's cash value and dividends from a mutual company so that the capital capture stays inside your family's moat. Imagine having a personal line of credit that never cuts you off, that keeps earning for your kids while you're at Disney with them, and that you control completely. It's not magic, it's math and ownership. It's about being your own source of financing instead of a customer of the banking system down the block. It's about turning the interest you would have paid to a third party into a growth engine for your family. You have to explain this to them in a way they can truly grasp. It's a powerful shift in thinking. Sneaking in the long-term care conversation. Here's where the room usually gets quiet. Let's talk about that elephant, long-term care. The median cost of private nursing home rooms just crossed 10 grand a month nationwide. That's over $120,000 a year. And traditional health insurance doesn't even touch it. Long-term care insurance helps, but the premiums climb every year you wait. For many families, this is a ticking time bomb. Now, you're going to have to connect the dots for them. A well-structured whole life insurance policy can be curated to help cover these costs if needed. Or better yet, a specific LTC policy where the guarantees of tax-free monthly benefits to cover medical, in-home care, or third-party nursing facility bills for as long as needed without forcing you to liquidate the family home, sell off a business, or drain a retirement account is best. When mom and dad realize the system protects their dignity and independence as much as it protects their portfolio, resistance melts away. This isn't about selling the product, it's about preserving a person's quality of life. That's the real value. Navigating objections. Empathy first, clarity second. You will hear objections to the event, to the meeting, to the questions that you're going to ask them. Be prepared. The most common one is, well, what if we get scammed? Smile. Acknowledge the question with respect. A good response is to point out that major corporations and banks buy billions of dollars in similar policy contracts every year. They even list them on their balance sheets as special asset classes called Tier 1 capital. If it's good enough for them, why not for us? Another objection you'll hear is, this sounds complicated. Now, a great analogy here is that banks are complicated too, yet we all use checking accounts and debit cards every day. The complexity is under the hood. The user experience is simple. Cash in, cash out, and growth ticking upward. You don't have to understand the whole engine to know how to drive the car. Now, someone might worry about risk. This is an opportunity to highlight the value of mutual life companies. Explain that policy guarantees come from companies that have paid guarantees and dividends for over 100 consecutive years through wars, recessions, depressions, pandemics, and even COVID. Yes, the baseline guarantee remains. Unlike market index funds that can flatline or go backward for a decade, this is about stability and certainty in an uncertain world. And finally, patience. Don't expect to close any deals with anyone in one sitting. Offer to send them short explainer videos from us, a book summary, or even your own annual statements. Let curiosity pull them forward rather than sales pressure pushing them or, of course, disdain for their habits. This is a marathon, not a sprint. You're building trust, and that takes time. The next steps, from discussion to action. Wrap the meeting up with a crystal clear and very small chunks of homework. The goal is momentum, not signatures of anyone. Maybe it's, hey, watch this 8-minute video on how compounding inside policies never stop. Maybe it's, list your top 3 financial goals and text them to me this week. Small, actionable steps are key. Invite each family member to a one-on-one coffee later if they want to dive deeper into their numbers. That keeps the group vibe supportive and not salesy. We're building a common language and a common fortress so no one gets blindsided by taxes, market crashes, or $10,000 a month nursing home bills. Look, money wounds run deep. Maybe it's a lifetime of scarcity, a bad investment, or just fear of the unknown. But families that heal themselves together create a generational advantage that no market trend can replicate. Inflation won't wait, markets won't calm just because we're nervous, and long-term care costs definitely won't stop. The only variable we control is how soon we start talking. If you want help turning this conversation into a concrete plan, tap the link below to schedule a strategy call and a cash conversation with me and the team. We'll walk you through the numbers, design a save and spend blueprint, and show your family how to protect your lifestyle and your legacy with a financial family reunion. I encourage you to share this video with the people you'll invite to the meeting. Let it break the ice for you. Set the date, serve some snacks, or do it virtually. Let's build a family bank system that lasts longer than any bull market ever could.